Thank you so much for tuning in today. I really appreciate it. I printed up a stack of articles today. I want to share all this with you. Love to get your feedback, so please comment down below. And as always, please like, share, and subscribe. But without further ado, let's get right into what's happening. Markets across the board today finished in the green. Everything looks wonderful on Wall Street. We're literally at all-time highs. I don't know why we're even talking about rate cuts when we're looking at Wall Street. We're looking at these markets at all-time highs. But the markets are completely ignoring what's happening in the real economy, what's happening in your life, your economy. Because when you read some of this data today, what is happening in the real economy is quite disturbing. And we're beginning to see more and more pain in the economy. How in the world, on some of the news today, I just cannot believe that the stock market can be going up with all of this data that we're getting. And this is, a lot of this is very manipulated, and yet the market is just ignoring it. I mean, I think it's much worse than what we're reading. But when you go to the store to go buy a pair of shoes, a shirt, you go to the grocery store, you go to the gas pump, you pay a utility bill, you understand that this is a really bad economy, and yet the stock market is at all-time highs. Somebody explained that to me. I see it as the stock market being very manipulated, that they're doing everything that they can to keep the markets propped up so that you believe everything is okay. Most people are not in the stock market. Most people don't really care. It's not affecting them. What is affecting them is stuff like this: gas prices, food prices, utility prices, car prices, home prices, rent prices. First article today: Nike warns of guidance cut as it posts slowest annual sales gain in 14 years. It warned it would cut its fiscal 2025 guidance as it continues to face financial challenges. So this is telling you and I that the consumer now is beginning to say, maybe I don't need a pair of $300 or $400 sneakers. I need to make my car payment. I need to make a utility payment. I need to feed my kids. So now that this discretionary spending, they don't have the luxury to buy $300 and $400 gym shoes. They don't have the discretionary money to do that. Now people are making real life decisions. Do I eat? Do I put food on the table? Do I put gas in the car? Or do I buy a $400 pair of Nikes? And they're choosing to do the other. They're putting food on the table and gas in the car, and they're cutting this stuff out. And so this is interesting. This warning from Nike. H&M plunges 13% on doubts over full year margin target June sales outlook. This is the world's second largest retailer, and this again is telling us that the consumer is tapped out. And remember, the consumer is paying more, getting less, and we're beginning to see these type of plunges. The consumer is pulling back. Here's another one. Walgreens stock plunges as drugstore chain slashes profit guidance in challenging consumer environment. This is on CNBC. The stock today down a whopping 22%. Over a 6-month span, Walgreens stock is down 54%. And you've probably seen a Walgreens in your area shut down. We're seeing so many of these drugstores shutting down. But if the economy was booming, if the consumer was so strong, would we be seeing so many stores, so many Walgreens shutting down, so many restaurants shutting down? No, we wouldn't. The consumer is been wrecked. The economy is in disarray. U.S. pending home sales plunge in May to a record low. Sales tumbled 2.2% month over month, 6.6% year over year. Anybody telling you and I that the housing market is healthy and strong is flat out lying. This is a housing collapse now. This now is resembling 2008. You can tell me till you're blue in the face that home prices are at all-time highs. That's wonderful. They're not selling. You have less people able to buy. More people that can buy are sitting on the sidelines because they're just not going to pay these prices at these rates. Not going to happen. So you're going to see more destruction in the housing market. Here's another one today. Again, this is all reflecting to you and I what is happening in the real U.S. economy. Forget the fraudulent stock market that is all propped up and very manipulated. They're having a very, very hard time manipulating the U.S. economy. It's too big, but they're doing their best that they can to manipulate it. A lot of the data is very skewed, but it's so bad that they can't even make the data positive anymore. They cannot make the data even sound somewhat good. It's so bad. They're having a hard time sweeping this under the rug. Core durable good orders decline in May. Growth scare grows as shipments plunge. Durable good orders are down 1.2% year over year. 4 of the last 5 months, they have been reduced or revised lower. So durable good orders revised lower 4 out of the past 5 months, and I believe 8 out of the last 12 months revised lower. So this is not a good sign for the U.S. economy. It's not a good sign for the consumer, because the consumer just is not spending like they once were. And when you look at 1 out of 5 consumers are tapped out with their credit cards, that's 20%. That is an astonishing number. And what happens when it's 2 out of 5, 3 out of 5 are tapped out? People, I mean, right now are only existing because they have a credit card. If they didn't have a credit card right now, they would be in big, big trouble. You are now watching the system melt down, and it's going to take a lot of people down with it. Daily Mail, house prices in these pandemic hotspots are set to nosedive. Real estate expert warns. Among the top 10 housing markets experiencing the quickest cool down, 6 are located in Florida, 2 are located in Texas. Inventory, it says, is piling up while construction is booming. So this is what I'm seeing out here too, is we have a massive slowdown with home purchases out here. And yet I'm seeing new developments literally going up every day. These new homes, astronomical figures that they're asking for these homes. It's unbelievable. And I'm thinking, who's going to buy these homes? And you could say, oh, BlackRock's going to buy every home, and that's not going to happen. And the question is, if you want to buy a home and use it as a rental, if you pay, $700,000 for a house in India, what are you going to be able to really rent it for? And less people are qualifying even to be able to rent a house now because they don't make enough money. So I think this is going to end much, much worse than the 2008 housing crash. I do believe that we have now entered a depression. I do believe that this housing collapse that has already begun is going to get much, much worse. That you're going to see prices have to come way down in order for some of this inventory to move. Too many homes now are hitting the MLS, and they're staying longer on the MLS, and you have this wave of new construction coming on the market, homes being built right now, and you're seeing less and less demand, less buyers. Home prices begin to cool as active listings jump 35%. This on CNBC today. Yesterday, I hope you checked out yesterday's video. I was with my good friend Enrique, and we were at a shopping mall that is 99% gone. I mean, 99% of the stores, retailers in the shopping mall are gone. It was completely empty. It's 99% vacant. Then on our way to lunch, we stopped over by a couple car lots. Please check out yesterday's video, because what's happening in the housing market now with home prices beginning to cool and active listings jumping, this inventory jumping, it's already begun in the auto and truck industry, because if you drive by your local car dealers, you've probably seen, you can probably verify this, that you're seeing a lot more cars on the car lots. And these cars are sitting longer on the car lots, and now you're seeing price reductions, sales, incentives, and all this that you didn't see a year or two ago, that's for sure. Now you're seeing it. So there's a lot of similarity to what's happening in the auto market, truck market, and the housing market. And all of this is going to, in my opinion, going to collapse. They have so many cars. They are parking these things in car lots all over the place. They don't have the room on the car lots to house this inventory, so they have to rent out inventories in Walmart parking lots and and other parking structures to put the overflow. Who's going to buy all these cars? BlackRock, Vanguard? They're not in the car business. Who's going to buy all of these cars? And the 2025s will be arriving soon. They still have 2023s on the lot. So what are they going to do with the 23s, 24s? How are they going to move these things? So in my opinion, I would just let them choke on it. They can sit with them for a very, very long time. I would not buy a house. I would not buy a truck. I would not buy a car unless it was severely discounted. Here's another one from Redfin. Renters must earn $66,120 to afford the typical U.S. apartment. The typical renter makes $11,000 less than that. Just 39% of renters make enough to afford a typical apartment in the United States. What are your thoughts on this? How in the world are you going to have a thriving real estate market when the typical renter needs to earn $66,000 to afford an apartment or a typical apartment, and the typical renter is making $11,000 less than that? And we're going to sit here every day on the television and just promote this incredible housing market, the incredible economy, the incredible auto market. It's all nonsense. It's all a bunch of BS. This is getting really, really bad. And I said years ago, you're going to see a lot of people go homeless. If they don't have a family to fall back on, if they don't have a church to fall back on, they're in big trouble. And people laugh when I say that there's a lot of people out there one flat tire away from big trouble. It's not a joke. It really is not a joke. And we'll talk more about that because we're going to talk about, how much money people have put away for an emergency. Talk about that in a minute on another article. But this one kind of struck a chord here. Homeowners in Cook County's South Suburbans hardest hit by latest round of property taxes. I bring this up because I grew up in the south side of Chicago, South Suburbs, and this we've talked about this years ago. Chicago's broke. The state of Illinois is broke. Huge debt and deficits. So what do you think they were going to do? They're not bringing in jobs. They're going to go after the property owners, the homeowners. They're going to go after and take money through taxation because they're broke. South suburban homeowners were hit with a severe case of sticker shock this week. This was unbelievable. The median bill jumped a record high of 19.9% across the southern portion of the county, Cook County. Dixmor and Phoenix, those two towns doubled. 1.8 million property tax bills will be mailed July 2nd with a net increase of $706 million in the countywide taxes. The median tax bill in the city of Dixmor jumped $1,950, a 122% increase. The city of Phoenix rose $1,744. That is these are just increases, not the property tax itself. These are the increase. That is 107% increase. And so growing up in the south suburbs of Chicago, this kind of hit home a little bit. This is what you get. This is what they're going to do in these states, in these counties when they're broke. They're coming after you, the property owner, the business owner. How are people going to continue to survive now? Their car insurance is up, their property insurance is up, their property taxes are up, their HOAs are up, their food costs are up, their gas prices are up, their health insurance is up. Everything is going up, and now they're just being hit over the head with this property tax increase, on average basically 20%. But I mean, some of these towns, wow, 107%, 122%. How many of you would be able to survive with an increase like that? I mean, this is really going to put people in a very, very serious position financially. Here's another one. More than half of Pennsylvania hospitals operating in the red. People keep telling us how good everything is, And we look at the hospitals in Colorado, now the hospitals in Pennsylvania. And look, if you want to keep taking people from all over the world, into your states, there's going to be a huge price to pay here. I love all people. I don't want to see people suffer. But who's going to suffer here when the hospitals go out of business? Pennsylvania will suffer. Colorado suffers. Everybody suffers because you, as a citizen of these states, where do you go for help if half your hospitals disappear? Not good. How much money you actually need in an emergency fund? It's essential to strike a balance between ambition and practicality. This on CNBC today. So getting back to the emergency fund, 6 in 10 U.S. adults say that they're uncomfortable with the level of emergency savings that they have. Get this, 56% have less than 3 months, and 27% have absolutely nothing for an emergency fund. So over half, 56%, so over half the country, if they lost a job today, they have less than 3 months. What, 2 months, two months, 1 week? That's all they have to survive to, pay the rent, the mortgage, the car payment, the credit cards, insurance, etc. 2.5 months, 3 months, that's it. They're done. If they don't replace that job loss with a new job that pays as well, they're going to be in very big trouble here. 27% have nothing. So literally 30% of Americans have nothing saved up. So if they lose a job tomorrow, they have a flat tire tomorrow, they're in big trouble. This I thought was supposed to be the wealthiest nation on planet Earth. We're told every day how well the economy is doing, how great the consumer is doing, but 30% of consumers apparently have no money saved up. So if an emergency arises, they lose a job tomorrow, they're in very, very big trouble. I mean, 56%, 3 months, less than 3 months, that's just not enough. It's not enough. So the condition of the U.S. consumer is basically life support. Most people are on life support. And one little hiccup and it's over. Here's another one. 4 in 10 companies say they've posted a fake job this year. Many of you have written me. I've read a lot of news articles where people have filled out hundreds of resumes. They don't hear anything. So here, 40% of companies are posting fake jobs. Again, reinforces with you and I that all of this is very, very manipulated and fake. So what you're seeing in the stock market, it's all artificial. A lot of it is just propped up with corporate buybacks. It's propped up with, these artificial injections over the past couple of years of trillions and trillions of dollars. And this thing, I'm telling you, in my opinion, I'm not an economist. I'm not a financial advisor. I'm just watching this like all of you. This melt up that we're seeing in Wall Street right now, or on Wall Street, is unlike anything we've ever seen before. And when it bursts, remember, there are pensions and retirements involved in this. There are investors involved in this. There are banks and financial institutions involved in this. This is going to be absolutely epic when this thing bursts. It is going to take down so many people. It is going to destroy so much wealth. And then, of course, it will bleed over into other sectors and burst other bubbles like the housing market. Commercial real estate is already bursting. But, when we see the banking system have to go mark to market, this is when reality hits in. This is when things become real quick. But they're not having to do that right now. So they are continuing to put off these commercial real estate losses. But when they have to put it mark to market, this is when everything is going to change, and then people and investors and everyday people are going to begin to realize how bad this really is. It will be very, very bad. Mark to market, people will begin to realize very, very quickly that the banks are in big trouble. So pay attention. Here's another one today from The Hedge. If you're shot, robbed, or assaulted in Chicago, there's a 50-50 chance there'll be no police to respond to your emergency call. So you could look at it as the cup half full or half empty. You know, maybe that's great news. At least you have a 50-50 chance. But basically, at the end of the day, you're on your own, and it hasn't even gotten bad yet. Can you imagine what this is going to look like as the economy worsens? I mean, these are somewhat stable times. We will look back and go, these were the good times. These were the good old days. And yet you have a 50-50 chance if you're assaulted, robbed, or shot in Chicago that a cop is going to show up. You're in America. This is America. It's beginning to look more and more third world every day, isn't it? CBS. Ford recalls more than 550,000 F-150 pickups over faulty transmission. When we were doing the video yesterday on the car lots, Enrique brought up the point that there had been so many recalls in the quality of the vehicles right now. Yet, you know, a basic pickup truck is $80,000, $90,000. 550,000. Let me make sure of that. 550,000 F-150s recalled. What in the world is going on with the quality of these vehicles? Please comment down below. Would you feel comfortable buying a vehicle in this market right now today? I mean, first off, everything's overpriced, but again, you're paying more, getting less. The quality has really fallen off of a cliff, in my opinion. I've never seen so many recalls than I have in the last 12 to 18 months. It is mind-blowing what is going on with these recalls. So that's it. We have the big debate tonight. How many of you are going to tune in and watch that? It should be quite interesting. I'll be checking it out. I don't get political on this show, as most of you know, but I am going to watch the debate. It should be very, very interesting. But we talk about things that are rigged and manipulated. It's just, again, more of the same old song and dance, more of the same old, and this, I have no idea what's going to happen, but they're definitely trying to make it very, very one-sided, that is for sure. But again, I'm not here to get political with all of you. I'm just reporting the news, the data, the facts. Feel free to comment down below. I do believe that it is going to get much, much worse, and we're going to see more job losses. I did not see the job numbers today. I apologize. I forgot to look that up, but I will check it out. Comment down below. What are the job losses? I have no idea, but this is going to be another problem added in to this whole disaster is job losses. As the economy gets worse and people are losing their jobs, this would be the worst possible time to lose a job. I'm going to leave it there today. As always, the number one asset is God, so be walking close to God. I don't know how much worse this is going to get, but I don't see it improving. It is going to continue to get much, much worse, so be prepared for that. Like, share, subscribe. Have a good day. Be careful. Let me know what you think about the debates. And as always, we'll talk tomorrow. God bless.